started off well in the green, and from the top, in fact, we have seen a lot of those mid-cap and small-cap stocks getting a bit of a whack. So midway through the trading session, or in fact at around 10:30 a.m. or today, we saw both those lines crisscross each other.
All right. Well, let's see how this plays along. Promises to be a very interesting second half. Right now, we will get you a market conversation. We have UR Bhatt, Director of Dalton Capital Advisors, joining us right here in the studios to talk about the fundamentals of this market. Mr. Bhatt, thank you so much for dropping by and being with us in our studios. First things first, this earnings season has gotten off on a bit of an ominous start, would you say? I mean, I just want to get your reaction to the way the market's dissecting, let's say, the indecent numbers. Nothing materially wrong, but the confidence just isn't coming back.
Well, I think generally, I think the market is somber, and I think that is what is getting reflected even in results which probably are not exactly something that one should be really worried about. But I think the market is in such a mood that they're expecting only bad news from everywhere, and the quarterly results are no exception. So generally, I think the expectation is not very high, and hopefully at least those low expectations are met.
All right, Mr. Bhatt, we got such good news coming in from the finance minister just a couple of weeks ago, or maybe 3 weeks ago, and we thought we were off to the races, that the markets are going to go to fresh all-time highs. From the top, we have seen some selling. What would your view be on the index? Do we see all-time highs before the end of this fiscal?
Might be, of course. I mean, if there is a trade deal between US and China, and if Brexit is sort of done, I mean, relatively harmlessly, I think, international events can certainly ensure that there is inflow, because if you see for the last about 5 months, more than $1 billion per month is going out of from the FPI kitty.
Right.
So at least if that is stopped, I think there is enough inflow in the domestic market to support the market.
I'm a little worried actually, because one would have thought after what the finance minister announced, we'll see a good amount of inflows. That's not really happened. In fact, if I look at a couple of data points in the last quarter, that's July to September, the outflows were around $4.5 billion odd.
Correct.
The positive is the last time we saw such a big outflow, the next quarter, the inflow was as much. So just, that we're being a little bit optimistic. But the problem for our markets has been the Nifty Bank.
Yeah.
It's moved up around 1,000 points a couple of trading sessions ago. Yesterday, it corrected nearly around 700 points. And today as well, concerns are there. And on frontline names, we're not talking about Yes Bank, DHFL. Now we're even talking about an IndusInd Bank that was at 2,000 rupees just a short while back. How would you position yourself on some of these private names, and which banks would you be positive on?
Well, I can't talk about specific banks, but generally I think that sector is not something that there's been a series of bad news.
Yeah.
I mean, the supposedly good corporates also have started being sort of targeted, and they are the ones who were favorites in the market for quite some time. So I think there are new sort of revelations as far as corporate lending is concerned. So I think that is what is really adding to the gloom. And of course, public sector banks are in a bad shape, continue to be in a bad shape. A lot of capital requirements that have really not come yet, and I think the private sector banks were sort of a class apart till now, but I think even there now, all the new names that are coming up, the private sector banks also have large exposure. So therefore, I think generally adds to the sort of gloom and doom in the banking sector.
Gosh, should we talk about gloom and doom around Diwali time, guys? So, I'm going to ask you this. So where to be in this market? Sure, there are a lot of challenges as you outlined. Yeah. What kind of stocks or sectors would you go in, and where would you deploy the money now?
Well, if you have to be in the market, I think then you should really do some cherry picking and see. And I don't think you have to invest 100% of your money, but some money you can probably invest where you are, actually betting on a turnaround.
Okay.
Maybe something like an auto. Because I think the autos have produced, month on month and year on year negative numbers for quite some time now. And I think come sort of April, you have BS6, and probably the NBFC issue also might be solved. So there might be, and even the base will be much lower.
Yeah.
So therefore, year on year figures will look much better. So therefore, I think that is something that may be worth, because they've corrected quite a lot. So that is one sector one could be invested in. Maybe even private sector banks, you can cherry pick and probably be there. I mean, they're expensive, no doubt, but they're rapidly gaining market share.
But here my simple follow-up is, in private sector banks, are you willing to buy some of the beaten down tier 2 names? Or do you think it's too confusing right now and just stick to the gold standard? I mean, stick to like right up there in HDFC Bank and the likes.
No, I think the gold standard is the way to go. as of now, because there's so much confusion in the market, because really nobody knows which are the large exposures these other private sector banks have, and where the new names are coming up in terms of nearing stress situations. So, but I think the gold standard is where it should be, and the important thing is they are reasonably expensive, no doubt, but I think they are rapidly gaining market share, because PSU banks have been in a bit of a bother for the last almost more than 2 years, and even some private sector banks are now getting there. So therefore, I think the ones which are good are gaining market share quite dramatically, and so that's where I think you should really back
so
up.
If I got that point correct, don't look at PSU banks, don't get into that valuation trap. If you want to buy, you should buy the good quality private banking names. And also you made this point on auto names. Some of them have factored in the bad news. You said you can't talk on specific stocks, but what would you be looking at playing? The passenger vehicle plays, the two-wheelers, or the CV plays? Where should we see a rebound first?
I think the rebound will be across the board.
Okay.
But I think what we would really see is probably the commercial vehicles. Commercial vehicles, because they've been beaten very badly. And the other fact is that, because of GST, because of all these octroi sort of nakas going out, so there is a huge efficiency gain there. So therefore, you can see that, the turnaround time for a particular trip is much lower. So therefore, it is as good as increasing capacity quite dramatically.
Yeah.
So that is why you are seeing this, 30-40% drop.
So
but I think that will be done now.
So commercial vehicles is the space that you expect to see a bounce first up. Finally, I'm looking at the biggest gainer today, that is Infosys, and TCS is a drag. If we pull up a contribution chart as well, they're moving in opposite directions. TCS has recovered from the low point of the day. IT space, is that a defensive, or it was a defensive? There are better names to look at now.
Well, I think it is at best a neutral, because we are really not even talking of double-digit growth numbers anymore, because we were talking of 20% plus growth some time ago. Thereafter, we came to near double-digit numbers. Now we are talking of low single-digit number growth. So therefore, I think the valuations have to correct this, have to get corrected, get adjusted to these low growth numbers. It may not happen by a huge price correction suddenly, but I think a time correction will be there. So people will start, people are holding big chunks of IT stocks, they may not sell, but they may just wait it out, and so there may not be huge price performance in the short run.
Okay, all right. Now, what's your take on IT? Because what we got from the bellwether was a bit of a scare. The way they're talking about demand in BFSI, the way retail's done for them, and just their general sense on the growth for even the next quarter. Do you think that's a TCS specific thing, or will it be a sign of things to come? Because IT has been the one safety spot in this market otherwise.
Well, I think it affects everybody. It is not as if someone is completely immune to what is happening to another biggie. So therefore, I think it's an industry-wide phenomenon, and all the big guys will be affected. Those who are in niches which are probably there are some growth areas, they may be different. But all the big guys are pretty much in the same sort of canvas. They're attacking the same customers virtually.
But would you still keep IT stocks in your portfolio? Would you buy IT stocks now at all?
IT is a very significant portion of the indices. So therefore, you have to be there, and you can at best be neutral. I don't think there's a huge case for us to be overweight there.
I think in cricketing parlance, you're putting it in this way, that if the the frontline batsmen are finding it difficult and the ball is seaming around, it'll be a little difficult for the guys who come in the middle order, the mid-cap IT names. Final question, very quickly. If someone had 100 rupees to invest, you said don't invest all the money right now when you're talking about larger cap names. But what about, is it the time now to put some money in some of those mid-caps and small caps, that have corrected big time?
Well, I think these are specific cases you have to really study the company and do. I don't think we can make a blanket statement that mid caps are corrected, so therefore you should buy.
But the underperformance has been quite stark, and there's a lot of fear out there. If you're getting bad news on larger cap names, then your mid cap and small cap, there's a lot of pessimism built out there. But select stocks, would you?
Yeah, I think sector specific. I think even like say for example, auto companies, auto ancillaries.
Right.
Well, these are areas where I think they have certainly, because even after BS6, the components will still be there. Maybe the number of components will come down even if it's electric vehicles. But those which are going to be there, I think these are ones one should really concentrate on. And I think they also got hammered out of shape. So I think these are the ones that you can probably cherry pick.
Okay, all right. Thanks, Mr. Bhatt, very much for joining us, giving us perspective on the market, on the sectors and the stocks that we discussed. Right now, we need to take a quick break. On the other side, Irfan Razak, Chairman and Managing Director of Prestige Estates, joins in to talk about their new project in New Delhi.